Now, moving on to other issues now, apart from an expensive Valentine, we saw that at the NGX, the market closed in the negative yesterday. However, and it's also important to note that the figures were down yesterday. Just Access Co, First Bank, GT Co, they all closed in the negative, especially Zenith Bank. Zenith Bank was more than 3% in the negative, but Access Co was the only figures that was in the positive. We know that it was down 2 days ago, then it recovered after the announcement on the acting CEO. We wish her all the best, but it seems perhaps that's boosting investors' confidence. And so we saw that there was a lot of cherry picking on Access Co yesterday, bringing it up back to a positive trend. But that was not the biggest story yesterday. One of the biggest stories in the market environment was the CBN intervention in the market. Zenith Bank, Stanbic, Fidelity, Keystone, they bought about $5 million, each of them, from the Central Bank of Nigeria, and they got it at the rate of 1,490, between 1,490 and 1,499. A total of $41 million were sold to these banks yesterday. Let's find out what this means, and perhaps the liquidity. Obviously, the liquidity should have been higher at the close of trade yesterday. Let's speak to Tobechukwu Ikpe, joining us for this. Now, hi, Tobe. Good morning.
Good morning.
Yeah, so tell us, what was the impact at the close of trade of this, the liquidity that the CBN sent into the market?
So the impact that we saw yesterday was, this led to an appreciation in the FX rate, the Naira versus USD. Recall that on Monday, the NAFEM rate, which is the fixing for the Naira against the greenback, closed at a high of 1,534. So yesterday, the CBN came in to intervene, as you said, and we saw the rates appreciate to 1,499 yesterday. So that's what we saw was the immediate impact of the intervention in the market by selling dollars to the banks.
So when I saw the rates, between 1,490 and 1,499, I was thinking, I guess the gap between the parallel market and the official market has been bridged by now, if the central bank is giving the commercial banks at this rate.
Yeah, so contrary to what we've seen in previous administrations, where when they intervene, when they do interventions back then, they did the interventions usually at a deep discount to where the markets was ordinarily trading. What we've seen from this administration, this is their first intervention since they took over the management of the monetary policy of the country, and they sold their dollars at their first intervention around where markets was trading between 1,450 and 1,500. So they are committed to their word that they are unifying the FX market. There won't be wide arbitrage between the so-called official rate and any other rate out that you can get out there. They've said that banks can quote whatever rate they want to buy and sell. It's truly a willing buyer, willing seller market. CBN is also part of the market. They came in to intervene yesterday, and they did so at current market levels.
So would this be a fair value of the Naira at this time? Would this be our reality?
Speaking to the fair value of the Naira, that can only be determined by the dynamics of supply and demand. If the CBN has enacted several policies recently to drive that supply, because there's so much pent-up demand for US dollars in Nigeria. The turnover that from their policy led to an increase in turnover just last week. We saw over 2.11 billion in turnover. And the CBN governor himself said it that last week alone, over $1 billion of dollars came into the country from foreign investors. So yes, we've seen traction there. So the more the liquidity continues to come into the market, it will aid price discovery. And if the CBN is also consistent in these interventions to also supply dollars at the rate that markets can know that we can get at around this rate, it should lead to an appreciation of the greenback in the long run against the Naira.
But isn't the constant intervention by the CBN equal to a depletion of our reserve? The IMF has already warned that we're going to lose about $8 billion. Isn't that what it means? And doesn't that also pose another set of risks to the country? Yes,
there'll be risk to that, because literally what the dollars they're using to intervene in markets is the foreign exchange earnings of the country. So that's why, on the back of that, they've also said that the NNPC is going to domicile their accounts to the CBN, and there'll be better transparency around actually what the country receives, and the CBN has a lot more leverage to intervene directly in the markets. When they see the flows, they can know what they can sell at each and every time. Unlike before, where under the previous administration, there were reports of the CBN saying that NNPC hadn't remitted any single dollar in months. So unlike that happening now, where the proceeds of the country that they sell from our foreign exchange and is largely from crude oil, will go directly to the CBN. They have more leverage to actually supply those dollars into the market. They can actually get that liquidity, which has always been a challenge. Once the liquidity comes in to drive price discovery, the issue has always been supply of the dollars into the market. Everybody knows Nigeria has a large import bill. So once we get that FX supply coming in, the government has tried to ramp up crude oil production. They've increased the number of barrels per day that were increasing. They've tried to drive down the crude oil theft as well. And they've also domiciled those FX proceeds with the CBN. So the FX supply is the key challenge. And this will help in the short term, but they also work on the fiscal side. The IMF has said they are not worried about the government's commitment to achieving their policy. They will say a lot of reforms. So in the long run, too, we should see the country in a better place.
So, I mean, I guess we seem to be following that track, because we see that Nigeria's production for January was more than 1.4 million, which is an improvement, over the past months. Now, do you see Nigeria escaping that forecast of the IMF that our foreign reserve would drop to about $29 billion? Can we do away with that?
Yeah, we can do away with that. The CBN has very brilliant people. I'm sure they always have different ways, different structures to raise funding for the country. There has been talks of the country tapping the Eurobond markets later in the year. We've seen successful Eurobond issuances from fellow sub-Saharan African countries that are not as strong as Nigeria in terms of the economy. We saw Kenya raise just last week $1.5 billion at the rate of 10% for 8 years. So Nigeria also as well can tap the Eurobond market to show up its FX reserves. We saw Ivory Coast and Benin Republic also raise dollars at single-digit levels also. So there are ways that they think about to raise funding for the country so that our FX reserves won't drop to precipitous levels.
All right, thank you so much for sharing your thoughts and morning with us this morning, Mr. Tobechukwu Ikpe, fixed income dealer with Access Bank.
Thank you for having me.